Hello, everyone, and welcome. My name is Philip Palumbo. I'm the host of the Palumbo Podcast, where we interview some of the most successful founders of businesses to learn about their journey to the top. Today, we have with us Andrew All, who is a seasoned finance and strategy executive who's at the forefront of transforming how the financial industry operates. With over 15 to 20 years of experience spanning both public and private markets globally, Andrew brings a unique perspective to the intersection of finance and cutting-edge technology. Andrew's extensive background in M&A, finance, and strategy, combined with his current work in AI-powered financial technology, makes him the perfect guest to discuss how artificial intelligence is reshaping the deal-making landscape. Andrew, thank you for coming on the show. Appreciate it.
Yeah, well, thank you so much for having me, Philip. I'm really excited to be here.
All right, great. So, Andrew, why don't we start off first with telling us a little bit about what you do exactly today?
Yeah, currently I am the CFO and co-founder of a stealth startup. We're venture backed and we've raised our seed round. The company is focused on effectively taking unstructured data from any file type, ingesting that data, and running it through our proprietary system. And then from there, we semantically map like key attributes for like financial metrics such as revenue, cost of sale, gross profit, all the way through the three statements into your artifact templates. So whether it's you as a customer or you use our proprietary models, all that is done and ingested in about 4 minutes.
Okay, so let me understand this because I always had questions about this, whether it's Snowflake, whether it's CoreWeave, whether it's Hammerspace. Maybe you may not, I'm sure you know CoreWeave and Snowflake.
Yep.
You say you take structured data.
Unstructured.
You said unstructured?
Yeah.
I'm sorry. So you take unstructured data of any company?
Yep. Any company.
Right. So give me an example of an ABC company, a make-believe company, right? So this make-believe company has data. When you say data specifically, you mean the finances of that company?
Yeah. Let's start with maybe our first product. Our first product is focused on deal analysis. And in a transaction on a traditional sense, the buy side investor would engage a target. And if there's interest, an NDA is executed, and then a VDR is populated by the target company. And so the buy side company would then go in and rip through that VDR. It takes, on average, about 60 hours to rip through it. And then all the data that's in there, where it's like audited financials, financial models, 409As, cap tables, they manually extract all that data and key it into an Excel sheet, right? That's what finance professionals have been doing for the past 50 years or so.
Right.
What we've done is we've created an application layer that sits on top of the base models today. And when I say base models, I'm talking about the LLMs. And we are able to take that VDR and, analyzing a single VDR and building a system for a single VDR is really easy, right? Because it's just mapping A to B. But if you're doing it for thousands of companies, every company has financials stated in different ways.
Right.
And that's what we talk about when we talk about the unstructured data. And so being able to take every VDR, running it through our system, and then mapping it directly to your artifacts, your templates, or our proprietary templates, that is an incredibly challenging task to do, and a very different way of attacking the market when it comes to application layers in fintech specific to AI.
Right. So you're taking that unstructured data for the buy side, the buyer of a particular business, and you're making it easier for them to get the answers that they need. It would normally take 6 to 8 hours, but with your product, it takes 4 minutes.
Right. That's right. So instead of spending all that time keying in the information yourself, all that data is populated in your spreadsheets. So let's just say you're trying to run your buy side analysis on whether you should acquire this business or not.
Right.
All right. So you're going to have historical actuals, and then you have the seller's forward projections. If those are in the VDR, it'll populate your file right away. And then from there, you spend most of your time on strategic analysis, strategic decision making, You can still work on the things that are really fun for you, which is, creating your buy side view. And we could also help with that. And, higher tier, like priority items, like deal structuring, if this is a great potential candidate for you.
And so this is the sole focus of what your company does.
That is our initial product. So when we came into, when the founders came together and decided to move forward with this venture, our initial thesis was around M&A. As we were building the product out, we realized that we have created a generalist product that could be leveraged across, various asset classes and various functions, all across the finance ecosystem.
Right, which I was going to ask you. So if I'm an analyst and I want to analyze Costco stock and dive into the financials and so forth, can I use your product?
You could. I would say that really near term, our focus is on private companies. I think private companies are harder to create a product for. I know there are vendors out there that are starting on the public company side. And I think another key differentiator for us is all of this is done without any prompt engineering, right? So we're trying to create a experience that is seamless with how a practitioner does it today. And so if you look at some of the other application layers out there, you would have to drop in a file and then prompt it to, return or generate or populate whatever it is that you want, and then continue prompting it until you arrive at where you want it to be. We're saying, hey, look, this is turnkey with your current process. We're not trying to process engineer, anything that's happening within your firm. We're just going to map into what you currently have.
Right. So what I talk about a lot with people like you, on this show is basically in starting up a company, it's okay, I'm going to start a company because there's a problem, right? Here's the problem and here's the solution, which is what you just talked about, what you do. Is that how this company was formed, based on the problem that you saw?
Yeah. So couple things. For myself, I've spent the majority of my career on the buy side, specifically in corporate development. So, a lot of personal pain points around, working on transactions, selling companies as well. And the founders, we all actually worked together at our last company.
Oh, wow.
And it was an incredibly painful process selling that business. And that gave the rest of the team a little bit more visibility into leveraging technology to solve this problem. And especially with the LLMs, so this is around like 2022, 2023, when the LLMs really started taking off, there was a real opportunity here that wasn't available before, due to the ability to semantically map with the base models today.
So before this, though, Andrew, you were on the buy side, you said.
That's right.
You were an investment banker.
No, actually, I spent most of my time in corporate development at technology companies like Ingram Micro, Western Digital. Yeah. On the connected car side of like Hyundai at Happy Money, I was the head of corporate development there, which is a fintech startup. It's where I met my co-founders, helping these companies acquire strategic targets.
Right, I understand. Yep, got it. So your background is in what? Computer science or engineer?
It's a great question. So I was originally a comp graphics major.
Wow.
Yeah, I couldn't see myself coding all day. And I was just curious about, why is a dollar worth more, tomorrow versus today, right? And I know fundamentally why I'd rather have that dollar today, because I can use it. And that curiosity led me to shift my my major over to business finance. And then from there, my first role in a finance accounting capacity, I started internal audit at AAA. I was there for a number of years. I shifted over to corporate finance at Ingram Micro, which is at the time like a $60 billion public company. And I was really fortunate enough to move from corporate finance over to corporate development and strategy. And that's when I kicked off my M&A career.
And then so developing, so you're the founders, your team, you developed this technology for this unstructured data for this product that you built, correct?
Yeah, so we've got an amazing group of engineers, data science professionals, and like subject matter expertise on our team, on top of experience building companies from zero through enterprise. Our technical team is building the product. I'm our subject matter expert here. And so a lot of times I'm providing guidance on, hey, this is how I would do it in practice. I understand you want to build it this way as an engineer. Let's try to meet in the middle or try to, find a way to do this efficiently. And then also I build a lot of our front end, like Excel codes that map into the templates themselves.
Okay, so you have, what do you have? One product, two products, three products?
We have two products today. So the first product is deal analysis. And after a transaction occurs, most private equity firms or investment firms will have post-close analysis. So they become a portco and they need to do like their periodic delta analysis, right? To say, hey, this is what we invested at, this is how they're tracking. And so the portco analysis is our second product. And we've got more than a dozen, products right behind that.
Okay, so you have two products. And you started this company when?
June of 2024.
Wow, so it's really new.
Yeah.
Okay, which is great. Congratulations, by the way.
Thank you.
So, and I'm sure there's a long road ahead of you, but so in June 2024. So before that, you were an employee.
That's right.
So when you made the decision to jump from an employee making a salary, I'm sure there's certain benefits you received, et cetera, to jumping into this new role. Now, did you do this because you already had capital personally that you were able to do this, or was it truly a leap of faith?
It's truly a leap of faith for myself. I would say that like we were fortunate to have sold our last business.
You had an egg, so you had an so when you said you sold your last business, weren't you an employee?
That's right. So we had an
So,
exit.
excuse me?
Yeah, we had an exit on our last company.
So the owners of that business had an exit, and you, as the employee, participated in that exit.
That's right.
Terrific. Okay, great. And so that allowed you or helped you to make this leap to where you are today.
That's right.
So for people that are listening, when they're in a situation where they're an employee and then decide to do what you did, right? It's a certain mindset that everybody needs. So walk me through your mindset and where you decided to make this decision.
I grew up in a household full of entrepreneurs.
Yeah.
Very, very blue collar family. And, when you're raised to have that entrepreneurial spirit, I do think it sticks with you, especially in your formative years. I was fortunate enough to build Ingram Micro's venture capital practice. That was like my first real taste of entrepreneurship inside a large organization. And I think I've approached it a very different way than, your traditional startup founder. I think a lot of folks think that, hey, you graduate college and from there you go and become like the next Zuckerberg or whatever it may be. Right. I think the average age of a startup co-founder is around 40. So, pretty close on the mark there. But, going back to taking a different path, I started at the enterprise level, right? Like very large organizations, learned the processes, learned really kind of the art of finance in a really amazing and safe environment. And when I say safe, I mean like financially safe, right? Relatively speaking.
Yeah.
And from there, I went smaller and smaller and smaller. Our last company that I was at, I joined right as we were raising our Series D. And I think these experiences allowed me to ease into that transition, and really feel like, hey, this is what I really want to do.
So, how many employees do you guys have? What's the
Uh,
total team count?
Including our consultants, about a dozen.
So about 12 people. So, so with this business, you got two great products that you guys believe in, right? Do you have a sales team that's going out there and trying to sell the product, right?
Yeah. We've got a gentleman by the name of Alec Roth who's leading our commercial efforts. Great
Right.
guy. Yep.
So talk to me, Andrew, about, within a business, obviously you have these great ideas. You look forward to building out a product, which you did, and then getting it out there and growing the business and really performing, which is why one of the reasons why you initially started. But now that you're in the business, tell me about the culture of your firm, of your company, and how do you think about culture? Do you even think about culture? Well, you don't even think about it because you're so wrapped up into the product piece because it is a young company.
Yeah, I think culture is really important, especially at a really small company, because it can make or break you. Some I would say key focuses when it comes to culture is like, hey, continuous learning, being kind. I think being kind is very different from being nice, right? Like we have the difficult conversations, and I think team first is another key thing that we harp on. And I think at the end of the day, you do want to have fun, right? Like, and what I mean by having fun is like really enjoying feeling challenged and what you're trying to achieve, understanding that like the probability of you knocking this out of the park is incredibly slim. But even though that, you still move forward and day to day progressively try to improve in the right trajectory.
Yeah, I love that. Kind, continuous learning, having fun. So culture is definitely important. So now you have this great product, or products, and growth is everything, right? I always say this all the time, like you and I, you could build a Ouija board, I could build a Ouija board, and you're just a much better marketer than I am, but my Ouija board may be better than yours, but because you're a better marketer and better prepared for growth, you're going to succeed me. You're going to outperform me for sure. So when you think about great products, again, I don't know much about assuming that that you do have great products built, right? How do you think about growth, and what are you doing to grow your business specifically?
I think there's a couple things. One, we are an AI first company. And when I say AI first, I also mean technology first. Right? So it's really important for us to start with how do we leverage technology to solve this pain point, as opposed to saying, hey, we want to create this business that's a traditional financial services business, and we want to add technology on top. It's a completely different mindset. When I think about growth, I think your financials are just a reflection of your operating metrics, right? And as long as you are benchmarking to what your comps are, what the broader market is showing, and you are continuously pulling on those levers and trying to make them more efficient, I believe the growth should come from that. Now, there's the scenario where you're building something.
Can I stop you for a second?
Sure.
But so what you were saying, so as far as growing sales, so you're saying your sales will grow because of why?
I see. Sorry, I apologize. I misunderstood.
Oh, no, that's okay.
Yeah. So I think building a premium product is really where we start.
Yep.
Right. So we build a premium product, and working closely with our prospects or our customers to co-design with them. Those two things should create a product that the market wants. And from there, we believe that word of mouth and our network will help drive growth there. This is a very, very relationship driven business model. So I imagine that our sales process is going to be slightly different than somebody in an adjacent vertical.
Right. So for example, like with my team, we'll sit down, in a conference room, we'll have a board up, and then we'll just go through different silos of ways that we could market ourselves to grow the business. For me, it's different. I've been doing this for a long time. I'm almost 100% referrals. But for my other advisors who are looking to grow, right, we go through different ways you can do that. And we have like 5 or 6 different strategies. So what you're saying for your particular company, there are 2 ways, right? If you build it right with your current customers and design it and customize it right, word of mouth. And the second part is your network.
That's right.
Right. So in terms of your network, what do you mean by that specifically?
Yeah, I'd say financial, like when it comes to venture capital firms, private equity firms, investment banks, a lot of this is largely relationship driven. Have we worked on a transaction book together in the past before? Has one of these firms like funded a company that you've been at? It's largely trust built, right? And I think our CEO brings a lot of that. And I'd say I attribute the majority of the credit to him, to be quite frank with you.
Yeah, no, that's great. So as owners of businesses, as the key thing you would agree is, the larger you can build your network, especially with key players, where you build relationships with these people, where you can call them and meet with them, and from that, hopefully get the word out there about your business. That's a lot of what you're saying. Do you agree with me?
Yeah. And your investors will evangelize for you as well.
And your investors, of course. Yeah, got it. So regarding the investors, which is different in a lot of businesses out there. So your business is venture backed.
That's right.
Right. So it's not just the co-founders own it. You have other venture capital that came in to assist in growing it.
Yeah, we've got a number of major institutional investors, Village Global, 10 VC, Cooley, and Storyhouse Ventures. And then we've got a number of angel investors as well.
You familiar with Playground by any chance? Just curious.
Yes.
They're invested with you or not yet?
No, I think for us, we like Jeff, our CEO, just had a really, great network, and he knows a lot of folks, and really hit it off with the people that we invested with.
The reason why I asked that, because as a firm, I'm building out a Palumbo venture fund where I'm going to have managers it'll be like 5 or 7 different managers that are venture fund focused. One of them is going to be Playground. So I've heard amazing things about them. That's why I'm asking. But so let me ask you, Andrew, in terms of the venture space, right? Venture cap as an asset class. I'm not sure if you have an opinion about this or not, but what do you think about the venture space? There's concerns out there about the venture space in terms of, return on capital. Do you share that same concern, or you think it's something that will continue to do well over time?
I think I mean, the asset class, when you talk about returns, I'd probably cut it up by like, quintiles, right? Cut it up by quintiles, and then you measure by vintage as well.
That's right.
I think the top players are always going to be able to generate outsized returns.
You
Right?
do.
I do believe they will. I think they especially with the shift from just like traditional venture capital to like end-to-end like asset managers who can potentially acquire as well. I think there's a lot of like alpha expansion opportunities for them. I do think it'll be a little harder for the smaller folks to compete. But that's just really the nature of the game.
I agree with you. I think with these bigger plays, a lot of it's organic and, like you said before, like network effect, et cetera.
Yep.
So to transition to the M&A world, right? Because you get a pulse on M&A, I'm assuming, because you're a business, right?
That's right.
So do you feel that since the new administration and with deregulation, are we starting to see a pickup finally in M&A? Because in January, February, that wasn't the case, but Goldman talked about this in their call that M&A seems to be picking up. Do you agree with that?
I think that like this is a very business friendly administration. There was a slowdown in M&A activity and including IPO activity.
Yeah.
Right. And I think it's a function of a couple of things. access to capital was relatively high to historical rates over the past 5 years. It's understandable too. I think with the advancements in AI, it's probably put a lot of M&A roadmaps on pause. And I think three, like,
Why do you think that? With the advancement of AI, it's put some M&A on pause.
well, I think I would personally have concern about if I'm acquiring business today that could potentially be disrupted by AI. Am I buying an asset that is yielding negative synergies?
Are you hearing chatter about that?
Yeah, I am.
So just want to make sure it's clear. So Andrew, so in other words, buyers of businesses or M&A has slowed down because buyers of businesses are concerned about how AI may disrupt a certain business,
Yeah,
which makes sense.
yeah.
Wow. Wow. What do you so M&A so what you're seeing M&A activity really isn't picking up at this point.
I think you're seeing some pickup on a relative basis over, past trailing 12 months. Um, but I think I'm going to go back to saying the best investors acquire in like downturns and like upturns, right?
Right.
So you've got the best strategic buyers who are always acquiring, and their deal flow doesn't really fluctuate all that much. And I think the smaller players, it's heavily dependent on your war chest.
Got it. Got it. And so oftentimes, Andrew, what I also do is when I interview people like you is to give founders an idea of, okay, I have this business. I mean, you're in the early rounds of your business. And I got to think about my personal self in terms of, what I talk about in my book is the idea of make work optional, which means that you have financial independence. So from a private wealth management standpoint, as you think about yourself in this current business, so let's just say you're doing $1 in sales and your profits is 50 cents, are we taking the 50 cents and just plowing it back into the business, or do you take chips off the table and invest in a portfolio of stocks or real estate or private investments yourself? What is your mindset around that?
Apologies. Could you repeat that?
Sure. So when it comes to personal wealth management, right? So I always say, get to the point where work is optional as quickly as possible, which means that you're financially independent. So if you walked away from where you are now, you have enough chips over here, saved up that you could just stop working for the rest of your life, that you'll generate enough cash flow. So when you think about your current business right now, let's say you're doing $1 in sales and your profits were 50 cents, are you taking the profits and rolling it back into the business? Are you putting chips aside? And how do you as a founder think about that personally?
I see. So for a venture-backed business, there's a high emphasis on growth, right? So a lot of any margin that you're picking up on the gross margin side, you're trying to reinvest it back into the business as much as possible. And that could traditionally has been around headcount growth, like new tools through like IT software, marketing, whatever it may be. But I do think there will be a shift in spend over the next few years from headcount to AI tools. I think there are a lot of tools out there today that can do the work that can improve your productivity by 6 to 10x. And if it can improve your productivity by 6 to 10x, I would argue that it is probably more prudent to spend the cash there than onboard more folks, run into churn. The other piece of building a venture-backed business is it's a bit more difficult to pour the gas without additional capital. So you may have to raise subsequent rounds. And I do see that there is some pickup in like bootstrapping your business or longer delays between rounds when it comes to capital raised. All those things are happening. But overall, in a venture model where you're trying to chase as much market share as possible, I do think you're going to need external capital to take you to that next level.
Absolutely.
Yeah. And I wanted to kind of go back to your question about M&A earlier. I want to specifically say, like, I think you're seeing more sector growth, specifically in like technology and like manufacturing or transport when it comes to M&A activity. So it is like vertical specific.
I would just, I would, that makes total sense to me. I mean, you're seeing a lot of that going on right now. There's a
Yep.
lot, there are a lot of private companies. Then you got quantum computing. We're going to see that going forward. So a lot of changes I think we're going to see going forward.
Yep.
Anything else, Andrew, that you want to add to the conversation? And I guess, because you're such a young company, venture backed, is there any work-life balance of what you're doing?
I think work-life balance depends on the day.
Yeah,
Yeah. Right.
what you mean.
Yeah.
Any advice for any aspiring entrepreneurs?
There's always going to be fear. And if you allow the fear to cripple you, something special could pass right by you if you don't act on it.
Yeah, I agree. I mean, since launching my own firm out of UBS and doing what I've done over the past 5.5 years, it's been explosive. It's been so much fun, enjoyable. And I agree with you. And it was so easy to be fearful doing what I did, but it was I'm glad I got over it, like you said, and it does make a huge difference in life.
Yeah.
But Andrew, this is great. I appreciate your time today and your perspectives, and congratulations on your success. And I'm sure it's going to be continued success. Sounds like you got two great products. I'm sure growing it from there. So congratulations with everything. I appreciate it. Look forward to continuing our relationship.
Yeah. Thank you so much for having me.
My pleasure.